Long politicians rely on slow
santé qui sont une priorité.
Oh mon Dieu, merci.
JD Belmos and Stephanie Levitz.
We agreed to intensify.
Not a typo, not a mistake. A real government-backed payment that can climb all the way up to $1,741.20 every single month.
That all of us together can improve that healthcare access for everybody. Thanks so much.
I just wanted to jump in on the topic of healthcare.
Most Canadians have never heard of it, and thousands of people who qualify for it right now are leaving that money on the table, month after month, simply because nobody told them it existed. Today, we are going to pull back the curtain on the CPP Disability benefit, who really qualifies, how the numbers are calculated, and why this payment might just be the most overlooked source of income in the entire Canadian pension system. Stay with me, because there is one detail near the end that surprises almost everyone. Let's start with the number that made you click, because it deserves a proper explanation.
Of external pressures. I don't want to know what people are against, but what they're for. How we can act with overwhelming force to build
The maximum CPP disability benefit for 2026 is $1,741.20 per month. That is the ceiling, the absolute top of what the program pays out to a single individual. Now, here is something important to understand right away. Very few people receive that exact maximum, and that is completely normal. The maximum is reserved for people who contributed at or near the highest level to the Canada Pension Plan for many, many years before their disability began. Most people who apply did not earn at the top of the pensionable earnings scale for their entire working life, and that is perfectly fine because the benefit is built to reflect your own personal contribution history. So what does the average person actually receive? According to the most recent figures published by the Government of Canada, the average amount paid to new beneficiaries is $1,210.86 per month. Sit with that number for a second. $1,200 every month, deposited directly into your bank account, is life-changing money for someone who can no longer work.
In the past, but one of the things he's been doing is sitting down with companies, bringing together
That is more than $14,000 a year of stable, indexed, government-guaranteed income, arriving whether you are having a good month or a difficult one. And it keeps coming, month after month, for as long as you remain eligible, all the way until you turn 65, and it converts into your regular retirement pension. Now, before we go any further, I want to address the question that is probably already forming in your mind. Who actually qualifies for this? Because a payment this significant is not handed out to just anyone. The Canada Pension Plan Disability Benefit has very specific eligibility rules, and understanding them is the difference between a successful application and a rejection letter. So let's break it down carefully, because this is where most people either get it right or make a costly mistake. There are essentially two big doors you have to walk through to qualify. The first door is about your contributions. The second door is about your medical condition. You have to pass through both. Let's take them one at a time. The first requirement is that you must have contributed to the Canada Pension Plan through your work. This is not a welfare program funded out of thin air. It is an insurance program that you and your employer paid into every time you received a paycheck. To be eligible, you generally need to have made valid contributions in 4 of the last 6 years.
And so if there's a common element to those discussions is, as Canadians would expect, is how do we make our aid?
There is also a special provision for people who have contributed for a very long time. If you have 25 or more years of contributions, you may qualify by having contributed in just 3 of the last 6 years. This contribution requirement is the gatekeeper that a lot of applicants overlook. If you have been out of the workforce for a long stretch, or if you never worked in Canada long enough to build up those contributions, this is the first thing you need to check. Now let's walk through the second door, and this is the one that trips up the most people, because it involves 2 very specific words that the government uses. To qualify medically, your disability must be considered both severe and prolonged. Those 2 words are not casual language. They are legal definitions, and each one has a precise meaning that Service Canada applies when they review your file. Let me explain exactly what each one means, because this is genuinely the heart of the whole application. Let's start with the word severe. In the context of the CPP disability benefit, severe does not simply mean that you feel very sick, or that you are in a lot of pain, or that your condition is serious. Severe has a specific working definition. It means that your medical condition prevents you from regularly doing any type of substantially gainful work. Read that carefully because the wording matters enormously. It does not say you cannot do your old job. It does not say you cannot do the specific career you trained for. It says you cannot regularly do any kind of work that would earn you a meaningful income. That is a much higher bar. Someone might be unable to continue as a construction worker because of a back injury, but if they could reasonably be expected to do a seated office job, they might not meet the severe standard.
Export markets. Commitment's simple. When Canadian companies build for Canada, Canada will build right alongside them. We launched.
The question the government asks is broad. Given your condition, your age, your education, your language skills, and your work experience, is there any realistic type of substantially gainful employment you could regularly perform? If the answer is genuinely no, you may meet the severe requirement. Now let's look at the second word, prolonged. Prolonged means that your disability is long-term and of indefinite duration, or that it is likely to result in death. In plain language, this is not for a temporary setback. If you break your leg and you will recover in 6 months, that does not meet the prolonged standard, even though it is genuinely disabling in the moment. The condition has to be expected to last for a long, indefinite period with no clear end in sight, or it has to be a condition that is life-threatening. Chronic illnesses, progressive diseases, permanent injuries, and serious mental health conditions that do not resolve are the kinds of situations this benefit is designed for. Here is the critical point that I want to make absolutely clear. Your disability has to be both severe and prolonged at the same time. A condition that is severe but temporary will not qualify. A condition that is prolonged but mild enough that you could still work will not qualify either. It is the combination of these two elements working together that opens the door to the benefit. When Service Canada reviews your application, they are essentially asking two questions in sequence. Can this person regularly do any substantially gainful work? And is this condition going to last a long time or be life-threatening? Only when both answers point toward disability do they approve the claim. This is exactly why the medical documentation on your application matters so much. It is not enough to simply state that you are unwell. Your doctor has to describe in clinical detail how your condition affects your ability to function and to work. The strongest applications paint a complete picture. They explain the diagnosis, the treatments you have tried, how you have responded to those treatments, and the specific real-world limitations you face day to day. Vague statements get rejected. Detailed, honest, specific medical evidence gets approved. If you take away one practical lesson from this entire video, let it be this. The quality of your medical evidence is very often the deciding factor. Now let's talk about how the money is actually calculated, because this is where the whole thing gets genuinely fascinating, and it explains why the amounts vary so much from person to person. The CPP disability benefit is not a single flat number that everyone receives. It is made up of two distinct pieces added together, and understanding these two pieces is the key to understanding your own potential amount. The first piece is called the flat rate portion. This is a fixed amount that every single person who is approved for the benefit receives, no matter what their work history looks like.
And significantly, is Canada going to join those other countries in cutting foreign aid?
Well, we have budget on November 4th, as you know, and
it does not matter whether you earned a high salary or a modest one. It does not matter how many years you contributed. Everyone who gets approved gets this same base amount. For 2026, that flat rate portion is $610.46 per month. Think of it as the foundation, the guaranteed floor that everyone stands on the moment they are approved. The second piece is called the earnings-related portion, and this is where your individual history comes into play. This part is calculated as a percentage of the retirement pension you have earned through your contributions over your working life. Specifically, it is based on 75% of your calculated retirement pension. So the more you contributed, and the higher your earnings were during your working years, the larger this earnings-related portion becomes. Someone who spent decades earning at or near the maximum pensionable earnings level will have a substantial earnings-related portion. Someone who worked part-time, or who had significant gaps in their employment, or who earned a more modest income, will have a smaller one. When you add those two pieces together, the flat rate foundation plus your personal earnings-related amount, you arrive at your total monthly benefit. And that total is capped at the maximum we discussed, $1,741.20 for 2026. So the maximum is essentially the flat rate plus the largest possible earnings-related portion, which only high, long-term contributors can reach. This two-part structure is precisely why the average, at just over $1,200, sits comfortably below the maximum.
Their contribution. The RCAF is providing search and rescue aircraft. The Canadian Interagency Forest Fire Centre is providing helicopters. We're in close communication with our...
Most people simply did not contribute at the very top of the scale for their entire career, and there is absolutely nothing wrong with that. Now, if you have children who depend on you, there is even more you should know, because the CPP disability benefit does not stop at the individual. There is a separate benefit for the dependent children of a disabled contributor.
Notre cadre budgétaire prévoit déjà des mesures visant à consacrer 4% de notre PIB à la défense.
For 2026, that children's benefit is $307.81 per month, and it is paid for each eligible child. So a parent with dependent children could see their household support increase meaningfully beyond their own personal benefit. This is one of those features that a lot of applicants do not realize is available, and it can make a real difference for a family trying to stay afloat while a parent cannot work. Let's take a moment to talk about the timing and the practical side of receiving this benefit, because knowing the rules is one thing, but knowing how it actually flows into your life is another. CPP disability payments are deposited on the same schedule as the regular CPP retirement pension and old age security. In 2026, these payments generally arrive near the end of each month, with the December payment moved up slightly so that it clears before the holidays. It is one unified payment calendar for the whole family of CPP benefits, so once you are approved, you can rely on a predictable rhythm of deposits. One thing you absolutely need to plan for is the processing time. This is not an instant benefit. Applications for CPP disability can take up to 4 months to process, and sometimes longer if additional medical information is requested. That is a significant wait, especially for someone who has already lost their income because they can no longer work. This is exactly why the advice from every expert is the same. Apply as soon as you become eligible. Do not wait. Do not delay while you gather perfect paperwork. Start the process early, because the clock on processing does not begin until your application is submitted. The sooner you apply, the sooner that first deposit can land. It is also worth being honest about one more reality. Not every application is approved on the first try. Some people receive a denial, and if that happens to you, it is not necessarily the end of the road. There is an appeals process, and many people who are initially denied go on to be approved after providing additional evidence or clarifying their medical situation. If you believe you genuinely meet the severe and prolonged standard, a denial is something you can challenge. Just be aware that there are strict time limits for appealing, so if you receive a denial letter, do not put it in a drawer and forget about it. Act on it promptly. Now, I promised you a detail near the end that surprises almost everyone, and here it is. This is the point that makes the entire CPP disability benefit so worth understanding, and it is the reason I wanted you to stay until now. Here is the surprising truth. For many people, the CPP disability benefit pays more than the regular CPP retirement pension would. Let that sink in for a moment because it runs completely against most people's intuition. We tend to assume that the retirement pension is the big headline benefit and that everything else is a smaller supplement. But look at the actual numbers side by side. The maximum regular CPP retirement pension at age 65 for 2026 is $1,507.65 per month. The maximum CPP disability benefit for 2026 is $1,741.20 per month. The disability benefit maximum is higher. It is more than $200 a month higher at the top end. Why does this happen? It comes back to that two-part structure we walked through. The disability benefit includes that flat rate foundation of $610.46 that everyone receives, layered on top of the earnings-related portion. The regular retirement pension does not include that same flat rate boost in the same way. So when you combine the guaranteed flat rate with a solid earnings-related amount, the disability benefit can actually pull ahead of what the same person would receive as an early retirement pension. For someone weighing their options, this is enormous. If you are between 60 and 65, and you are living with a severe and prolonged disability, taking your CPP retirement pension early might feel like the obvious move. But if you qualify for the disability benefit instead, you could end up with a noticeably larger monthly payment for those years, and then it seamlessly converts to your regular retirement pension at 65 anyway. This is the kind of insight that can be worth thousands of dollars over the span of just a few years, and yet it is almost never discussed. People reach for the early retirement pension because it is familiar and they have heard of it, while the disability benefit, which might serve them far better, goes unclaimed. If you are in that window of life, dealing with a condition that keeps you from working, this comparison alone is reason enough to look into CPP disability seriously before you make any decision about taking your retirement pension early.
No more important goal than a strong, united country working together in our common interests. Canada Strong means coming together in the face.
So let's pull all of this together, because we have covered a lot of ground, and I want you to walk away with a clear picture. The CPP disability benefit is a monthly, taxable, government-backed payment for people who have contributed to the Canada Pension Plan and who can no longer work because of a condition that is both severe and prolonged. Severe means you cannot regularly do any substantially gainful work, not just your old job. Prolonged means the condition is long-term and indefinite, or life-threatening. You need to satisfy both the contribution requirement, which generally means contributing in 4 of the last 6 years, and the medical requirement, backed by strong, detailed documentation from your doctor. The amount you receive is built from a flat rate foundation of $610.46 that everyone gets, plus an earnings-related portion based on 75% of your calculated retirement pension. The maximum for 2026 is $1,741.20, and the average new beneficiary receives $1,210.86. If you have dependent children, there is an additional benefit of $307.81 per child. Payments arrive on the same monthly schedule as the retirement pension and old age security, and processing can take up to 4 months, so applying early is essential. And perhaps most surprising of all, the maximum disability benefit is actually higher than the maximum regular retirement pension, which makes it a genuinely powerful option for anyone in that pre-retirement window living with a serious disability. If there is one message I hope you take from all of this, it is simply this: do not assume you do not qualify. So many people rule themselves out before they ever apply, either because they have never heard of the benefit or because they misunderstand what severe and prolonged really mean. The rules are specific, but they are also broader than most people expect, and the payment is far too significant to leave unexplored. If you or someone you love is living with a condition that makes working impossible, this is a benefit worth understanding in full, checking your eligibility on, and applying for without delay. Because that letter from Service Canada, the one with a number bigger than you ever expected, only arrives if you take that first step and apply. Thank you for watching all the way to the end. If this helped clear up how CPP disability really works, share it with someone who needs to hear it, because there is a very good chance they have no idea this money exists.